Welcome to another Founder Wisdom Pod. We have Johnny Wilkinson with us. He's co-founder at Equitise. They enable Kiwi and Aussie startups to raise capital in an intuitive, simple, and social way. So sort of a crowdfunding platform, beautiful one, and got a bunch of interesting startups in there. Johnny's the next city, worked at Red Bull as well for 2 years, and yeah, cool guy altogether. Had a nice convo last week. He's also Forbes 30 under 30 and a fintech advisor. He's live from Sydney, Australia. I'm in Montreal, Canada right now, and this podcast is presented to you by podfire.com. That's my podcasting company. If you want to start and monetize your podcast, go to podfire.com to do it the unconventional way. Johnny, welcome to the pod. Tell me a bit more about yourself and Equitise.
Thanks for having me, Charles. So Equitise, we started with a mission and vision to make early stage capital markets more efficient. There's a lot of people, advisors, brokers, and other bad actors that had traditionally extracted a lot of value and not helped startups. And then the other side of it meant that it was quite difficult for everyday investors to access and invest in this asset class that we believe very strongly in and has a lot of benefits to holding in your portfolio. So we went about getting some laws changed in Australia to allow for equity crowdfunding and also facilitate everyday people investing in private companies. We love what we do. We've helped raise just shy of $100 million for 130 odd companies. We've had a couple of companies do well. One's been acquired by Uber. Some others have listed and that sort of stuff. But yeah, it's exciting, and we love what we do and get to work with a lot of very cool companies.
So it was a long road. You've been at it for 9 years, extinguishing fires. What challenges did you face, and how did you surpass these big, fat, ugly dragons trying to kill your startup?
So the first problem we had, we quit our jobs and started an accelerator program because there was an anticipated change of laws to allow for equity crowdfunding. There was a sudden change of government in Australia, which meant that was going to be delayed. So we got on a plane and went to New Zealand, got the business set up and licensed there because they already had regulations in place, and then got the business operating, and then came back and had to lobby the government in Australia to get the laws changed. So doing lobbying, and we did it all ourselves, is quite involved and takes a lot of time and energy. But we were lucky being a part of sort of FinTech Australia when we were starting up, and being in an advisory group to the government meant that we could help get things through and work with the government and the opposition to bring it to fruition. So the first 5 years almost was just trying to get the laws in place so we could do what we wanted to do and run the business model as we intended. Since then, usual travails of startup funding, staffing, all those sorts of things you have troubles with. But obviously, the COVID put a bit of a bump in things. And the first 6 months where COVID was on, we basically did nothing, had to batten down the hatches, and then had a good period after that. And then in the last sort of year or two with the macro uncertainty and interest rates going up and volatility, people haven't been so readily investing. So it's been challenging, but we're passionate about what we're doing. There's a mission and it's helping. So we're persevering and hopefully things settle down and, global markets are less volatile and interest rates level off, and we can have great investment activity again.
I believe you're the largest platform of this kind in Australia and New Zealand. There's many of these platforms in the US. Are you having any plan to go international, or just to emphasize on your first mover's advantage in Australia and New Zealand?
So we think trying to operate in the US and even the UK, where equity crowdfunding is most established, is difficult and probably somewhat foolhardy. We have lots of equivalent businesses that are well-funded and much larger and more established. So trying to compete would be a lot of energy and resources that we don't think we want to divert. Asia Pac, so Australia, New Zealand, and then sort of the high growth parts of Southeast Asia are where we think the best opportunities for us and where we can have the most impact. You know, the UK, Europe, and the US are obviously some very established, entrenched private equity venture capital markets. In Asia, you know, less so. So the ability to provide the platform, the infrastructure, and ecosystem that can help facilitate that is the biggest and best that we have. So that's what we're focusing on and where we think the best opportunities.
How do you make money off this business?
Good question. So all the companies pay a little bit of an upfront fee that covers a bit of time and costs on our side, but also means that they're committed and bought into the process. And then we charge a commission on the money we raise. Typically something like 6%, can be a little bit higher depending on the raise. But yeah, we'll charge a commission on the funds that we raise.
You've got really cool companies. A lot of are environment friendly. There's this urban electric motorcycle. How do you get the startups to apply on the platform?
So we're lucky. We get a lot of companies coming to us. Call it 500 or more a year. We're quite selective and you know, take on less than 10% of those. We also get a lot of referrals from networks, lawyers, accountants, investors, advisors in the startup space. So that, you know, like a VC, a warm introduction is often much better and often carries more weight and is qualified. So that's where we get it. But we also look at trends that we see coming, or things that are hot and reach out. So definitely sustainability, environmental, EV have been quite hot. We've done in the last year two EV motorcycle businesses, Australia, one in New Zealand. One's a bit more focused on sort of sports bikes. The others are just cafe race to get around town. We've raised for a new solar business that does off-grid solar installation and storage. We've done sustainable packaging. We're about to raise money for a hemp bioplastics business. That's a cutlery and straw alternative for traditional plastics. So it's exciting in that, yeah, definitely an area that has a lot of interest. So we look at trends and try and keep up with the trends, and that's where the general investor demand is as well.
Have you raised money yourself? Are you still raising?
So we're about to raise some more money for ourselves. We have raised, initially we did sort of an accelerator and a small seed round with a VC and some angels. We then had Investec, the UK and South African bank invest. And we've done a couple rounds with sort of our platform investors and networks. We've not raised a heap of money or done any big noteworthy rounds. But yeah, we're potentially soon in our expansion into Southeast Asia going to do a bigger round. And yeah, I'm currently talking to some people, or have been talking to people about doing a raise for ourselves at the moment.
How did you meet Chris, and how are you guys a great combo?
So yeah, so Chris, my co-founder, we met at uni, lived together for a bit, and then we're both doing our own things, working in corporate. I was at Citi, he was at Deloitte, and then had went to run the operations for a startup. It was a HR SaaS business. We were both kind of looking for the next thing. Knew of equity crowdfunding. A buddy of ours had been involved with AngelList from the beginning, and we'd been watching the UK market with Crowdcube and Seeders. Yeah, we're passionate. Had an idea. We were actually at a mate's birthday dinner, having a few beers, and said, "Yeah, let's put together a deck." Literally a couple of days later, something came up on a news feed saying AWI Ventures looking to make early stage investments, and that was the fintech accelerator that we originally went through. So we kind of threw ourselves at it and went through the accelerator program and went from there. Chris is now living in the US, so he's not involved in the day-to-day operations of the business, but he's still, you know, around and an investor and shareholder, and does what he can to support. We sort of similar but complementary skills and experience, which was great to start a business and get off the ground.
What did you learn from AngelList?
So AngelList is probably one of the pioneers in trying to bring together and create an ecosystem and infrastructure to make it easier and more accessible for people to access and invest in venture capital and traditional angel investing as an asset class. They did a lot of great things around getting networks going, having interaction, and things that help build out the ecosystem and the network and help build the network effect. So there was a lot of great things from that. Crowdcube and Seeders, the UK platforms, we learned a lot from them as well. There's things we've taken from different companies doing similar things in different geographies, but then we've worked out how it best fits in our local market.
You also invest in more traditional businesses, not necessarily startups. Technological startups, that is. What are the advantages of doing that, and what are the disadvantages?
Yeah, it's a good question. So we do some of your traditional tech startups that are VC style, trying to change the world, big crazy idea, 100 times return. But then we also do some more traditional consumer-facing businesses. They might grow and they might deliver some really good returns for investors, but it's not going to be 100 times. It's going to be 3, 4, 5 times. They might be consumer-facing businesses, could be a health food company, those sorts of things. In Australia, there's not a very deep market of private equity or the sort of mid-market growth investors. So having funding available for some of these businesses is quite valuable. So we want to offer as much of a selection of these types of high growth unlisted businesses. Some are more venture capital, some are a bit more stable. The benefit is that, especially with our low minimum investment, which is typically $250, you can build a portfolio of 50, 100 of these companies, and based on literature and probability of the returns you should get a pretty decent sort of return across the board by having that diversified exposure. You don't get the same focus and concentration, which is arguably good and bad, in kind of doing it with this spread of companies. So you're not just going after a fintech sector or consumer goods or something like that. But given the nature of what we do, it's more passive, and our investors are kind of following along other investors and leveraging that. So it's almost like a kind of Vanguard style. It's more passive. You're just getting exposure, and if you can have that broad exposure, then your returns should be pretty good.
And in the end, you're competing against like traditional funds or even real estate. Like, why would people invest on your platform rather than more traditional types of investment?
So we don't like to think that we're competing. I mean, obviously for an investor and their asset allocation and where they're putting their money, they do need to make choices. But in doing what we do, we give them greater choice and access. And specifically, most of our investors aren't your traditional accredited wholesale sophisticated investor, whatever you call it in your local jurisdiction. So they're not willing, or they don't have access to invest, $100,000 or $250,000 as the minimum investment in a VC fund, or even PE funds are more. And some of these sort of real estate investment opportunities have similarly high minimums. So by being able to open up access and get people to be able to put a little bit in, dip their toe in, understand the asset class or how they're investing, and build from there is quite valuable. So you know, we again don't like to think as though we're competing. And traditionally in Australia, the asset allocation is quite underweight, or not even, you know, representative of having private equity, venture capital, and even some more of the alternatives that you can access. And it's heavily weighted to cash and property. So being able to move some of that allocation is obviously beneficial for people in their portfolios. They're non-correlated assets that can help them. And if we're providing that access and giving people the opportunity to learn and grow and allocate more, then they might put 5% of their portfolio to alternatives, which we're a part of, and they might put some money into a fund or you know, something more traditional. That's great. We want people doing that and understanding the benefits.
It's a nice gateway to Angel, and Angel's a nice gateway to VC.
Definitely. Yep. And it's like anything, you know, your first investment on the stock market, you're not going to buy $1 million of a single stock. You're probably going to put $1,000 or a few $1,000s into a company that you've heard about, you've researched, a friend's told you about, or something that you love and you want to get exposure to, and you go from there. You learn. Then you might, you know, hopefully if you do well, or if you start building out the investment, you start maybe looking at some ETFs, and then you might do some more single stocks or things that you're interested in, depending on your you know, your time and focus and how you want to invest. And they're the opportunities that you kind of look at.
The ultimate investment would be to invest in a pool of crowdfunding platforms. That's I think what I would do. Just that you need to be a bit more savvy to do that. What's your plan with Equitise? Like, you've been almost 10 years at it. Like, you want to exit at some point? What's your plan here?
Look, I love what we do, and we're helping lots of great companies and exciting and rewarding sort of stuff. If I have external shareholders, so you know, I've got to factor them in and do what's right for them. If someone came and looked to acquire the business, I'd definitely be open to that if it made sense and if it was the right terms. I just want to keep on growing it. We do capital raising. We're expanding to other related services that companies want and need. You know, secondary trading, us running our own fund, other services that help build out the early stage market and make it more efficient and give greater access. So we're big believers in doing that, and there's still plenty of opportunity and growth that we have. So we're focusing on that. Who knows where we'll get to and then what the outcome is. But yeah, I could be doing this for another 10 or 20 years, but we'll see.
How hot is the NZ and Oz IPO market?
The New Zealand IPO market is not very hot at all. There's some structural historical things around that, and particularly in Australia and New Zealand, the Australian Stock Exchange is much larger and more dominant, and there's ways that you can dual list, and even some of the New Zealand companies will just directly list on the Australian Stock Exchange. The ASX IPO market, like all main listed markets, has been impacted over the last 2 years, but it's coming back. We helped a company raise towards the end of last year, and they doubled on the first day. They've settled back down, and they're sort of up 50% from where they're listed. They're doing well. There's more companies coming through and good opportunity, I think. So my expectation is the ASX IPO sort of pipe and market will do pretty well for a portion of this year, and then depending on the broader macro climate and where things are moving, it might sort of level off a bit, but I think it's going to be much better than it has been, and there's more room to continue and grow.
How do you split your time up nowadays?
So I'm probably a little bit more involved in the day-to-day operations of the business than I'd like. We're a pretty small team and we work quite collaboratively. But yeah, it's a mix of new business, going out meeting with potential partners, investors, you know, managing the team, managing the deals in our pipeline, and sort of running the operations and making sure everything's going smoothly. So No 2 days are the same. A lot of different things. Some days good, some days not so good. But yeah, it's exciting stuff.
So what would be your top goals for this year if you'd have to be very satisfied at your performances and what you've accomplished in 11 months from now? What would you have accomplished?
So we've got a secondary trading facility that we've had used by a couple of companies but haven't pushed it. Hopefully the market and demand is there, and that kind of starts to take off a bit. Raising some money so we can grow the business and grow the team and add more resources is another focus. But yeah, just growing the business from a strong base that we have. That's what I'm keen to do. Grow it by 50, 100%. Would be great, and we definitely have the opportunity to do that. And as a function of all that is we're helping a lot of companies raise money and go on and succeed. So doing that is the main goal and benefit we get.
Where can people find out more about you, John?
So equitise.com, jump on the website. You can create an account if you're in Australia and New Zealand. It's easy to invest. If you're outside of Australia and New Zealand, in certain select markets, we will accept accredited investors or qualified investors or wholesale investors, depending on where you're from. But yeah, it's the website. People can reach out and connect on LinkedIn. They're the main ways that you can go about it. I'm not the famous rugby player Johnny Wilkinson, so when you put me in Google, you probably need to add Equitise or search for that in LinkedIn.